This is Rebecca with the Cat and Rebecca Show, Keep It Real Estate, and today we're with Brian Kavanagh, the Franklin Loan Center. And one of the biggest things for maybe sellers is, how come I have a buyer for my home and just before closing the buyer failed? Or you see where buyers fail and you're a buyer and you want to know why. Why does this happen?
That is a very good point. When buyers come to me and I pre-approve them, I tell them what they're qualified for, we make their payment fit, they go out searching for that property, and sometimes it takes months to find that right house. And then once they go under contract for that house, then you've got another 30 days possibly, or longer. So you have to work out those 3 or 4 months. When we approve somebody in the beginning, we approve them based on the initial visit. And then once they find that contract, we re-update information that's in there. We always tell borrowers, do not change anything from the time that we met. If there needs to be some sort of change, like drastic money coming in or out of the bank.
Yeah, I lost my job. I've been
a
laid
job
off.
change. I want to buy something. They have to let us know or ask us if that is going to jeopardize that approval, their pre-approval or the approval once they are under contract. Remember, we look at several different things. We look at your income, how you've had that income, how long it is, and what kind of income. So if that income stream stops, that's going to kind of change your approval or possibly deny a loan. We look at your monies, what kind of money you have in the bank for savings, what you're going to need to bring in. If that changes because you just bought a boat and you no longer have that money, that can change your approval. The third thing we look at is credit. We look at your credit from that date. Now remember, that date that we looked at your credit sometimes is lagging by 30 days from the repositories. The repositories are the different bureaus that go ahead and compile all the information and put it in a credit report. If you add something to that credit, like you bought a car for an additional $500 a month, or you've got new credit cards, or a collection showed up, all of those things can void your approval. So we tell clients never to make any changes to their lifestyle, not in income, not in your bank accounts, either putting money in or taking money out of the bank, or credit. Do not change your credit situation.
Now, it used to be that every time you'd run someone's credit, it would kind of what we'd call ding their score a bit. And if you're kind of teetering on a certain number, it may make the difference between what type of loan or if you can qualify or not. Does each time, if you, let's say you're in the process of purchasing a house and maybe you want to buy new furnishings and see how much you qualify to make payments on that furniture, if somebody runs that credit, is that going to change that score enough to disqualify for a loan?
That could.
Okay.
You should not run your credit at all. Okay.
That's
You should
always
run
what I
it.
recommend.
You should run it once a year, sometimes twice a year, to see if there's any erroneous information that's on there. Okay. If you have multiple inquiries in a short period of time through multiple different companies, such as a furniture company here, a car company here, a bank here, it is going to hurt your credit. It looks like you're trying to make a large purchase somewhere and you're all over the place. If you have several, just a pocket of like mortgage inquiries, it looks like you're shopping for the best rate and it's over a small period of time, typically it's not going to hurt your credit report that much or your credit score. It might just lower it a point or two. Okay? If you're shopping for a car and it's spread out over 4 months and you just have hundreds and hundreds of inquiries, that is going to really hurt your credit. Okay.
Okay, now I always too, every time I have a client and they go to Escrow or wherever their docs will be signed for their loan, I think they feel like, oh, I've signed my loan docs, my loan's approved. And I always warn them, do not buy a car until we have an actual closing or anything else, because I'm sure you can explain how the credit is pulled right prior to funding.
Correct. Lenders do it 2 different ways. They have your initial credit report that they work off of, and then right before they fund, they could pull another credit report to make sure that your structures have not changed at all. That can hurt you a lot. Or they could just go ahead and do a soft pull, where they basically just touch on it. It's not an actual credit report, and it lets you know if there's been any new inquiries or any new debts taken. So it's not going to change your credit score or anything. It's just going to let us know that they just went to Bob's House of Furniture and got a $2,000 line of credit.
Yeah, I had a friend
And that
once.
can change the deal.
Yeah, they signed loan docs. It was the day before closing. Client went out and bought a car, and they thought they were good, and all of a sudden the loan was pulled, and everybody was extremely disappointed, particularly the buyers. So again, it's staying on point of not doing anything that's changing anything of your credit history or what
Employment history
they'll all affect
or
it.
savings.
Yeah, the employment you have less control over, but you do have
You'd
hopefully
be surprised.
impunds.
You'd be surprised.
Okay.
People hear that they've got loan approval. I'm going to quit my job.
Yeah,
Because they've already called the company to verify that I work there. Well, yeah, we still go all the way up until the day that we close.
So be aware that if you're looking at that house and you have a shorter range plan or a longer range plan, having maybe a future child or maybe somebody's not going to work in the future, that your loan's going to all be based on what Brian's taking from you, and they will keep checking until you've actually funded, closed, and that home is yours.
That is
so
correct.
To stay safe, make no changes until that time, and then assess what payments look like and move forward. So this is Rebecca and Brian, and we'll be with you again, and this is Keep It Real Estate.